Good afternoon, everybody, and welcome to another Tuesday class brought to you by Quest Trust Company. I am Nicole Bako, an IRA specialist. We have some very special guests with us to talk about cryptocurrency, which is a new investment you can make in your self-directed IRA here at Quest. Before we get to the men of the moment, just a little bit about Quest in case you're new to us. So here we go. So who is Quest? We happen to be the largest self-directed IRA in Texas. We have over 20,000 active investors across the country. No matter where you're joining us, we can certainly help you. I need to update these slides. $2.2 billion assets under administration. And we do have a little over 100 employees. We are based out of Houston, Texas, and we do have offices in Austin and Dallas as well. Of course, our disclaimer, this webinar is for education purposes only. Quest Trust Company does not offer tax, investment, strategy advice, or any other advice whatsoever. We are providing education in this webinar. Please make sure you're contacting your CPA, your attorney, your financial planner, your professionals before getting into any investment or investment persons, if you will. So make sure you're doing your due diligence. All right, there was a disclaimer. Come on, Mr. Arrow. Oh, and $400 million in undirected cash. This is a huge opportunity for borrowers and lenders alike. Of course, you can lend your funds out in the form of a promissory note. So lots of money to work with there. All right, so what is a self-directed IRA and why should you have one? So a self-directed IRA, self-directed is honestly just a marketing term. And it really just means you are in control. You are picking all of the investments. You are doing the due diligence. There is no legal distinction between a traditional IRA, like a brokerage house, a Fidelity, a Charles Schwab, a Vanguard, if you will, and a self-directed traditional IRA at Quest Trust Company. Quest Trust Company only holds private assets, and we have an open architecture platform to hold said assets. So legally, not the same, legally they are the same contribution limits, same rules by the IRS. So self-directed just means you have all the controls. So some benefits of the self-directed IRA. First being diversification. Diversification either in an entire retirement portfolio, perhaps you do invest in publicly traded assets, private assets, maybe some cryptocurrency as well. Or because there are so many private assets you can invest in, you're diversifying your self-directed IRA in general. The tax savings. All of the accounts at Quest Trust Company do have some sort of tax benefit. The traditional IRA could be a tax deductible contribution. The Roth IRA, meeting some qualifications, you can actually get all of your retirement funds come out tax-free. Social investing. This is something that, like not everybody can get a traditional mortgage. So perhaps doing some seller financing, that would give somebody a chance for home ownership where they normally wouldn't have that chance. And invest where you know best. This is a chance where you get to shine with the investment knowledge or the education that you have. So if you know a lot about the real estate market, you know a lot about oil and gas, you know a lot about cryptocurrency, this is where you can use your education to shine and help yourself save for retirement. These are the 7 accounts we have at Quest Trust Company. I'd love to tell you more, but just don't have time right now. Make sure you're contacting your IRA specialist. We would love to tell you more. Again, these are our main asset classes that our clients typically invest in. You can see real estate, private entities, promissory notes. Under private entities is oil and gas. We've seen cattle, we've seen racehorses in the IRAs. So it's a very big, wide open space. Again, love to tell you more, but make sure you're contacting your IRA specialist. We would love to help you. Opening an account with us, very, very easy. Our normal processing time is 24 to 48 hours. So you'll open your account. We can help you get the money over into your Quest Trust IRA. Again, because you have all the control, you're telling us what you'd like to invest in. We help you facilitate that transaction with importance, and then we can go ahead and fund your investment. Of course, we love, love, love giving education, like in our Tuesday and Saturday noon classes. But we always have, there's other things too. So if you do miss a class, no big deal. Our YouTube channel has all of our past webinars on under the video section on our YouTube channel. And we also have, we're getting back, of course, to our in-person social. If you're not in the Texas area for that, we do have our virtual networking happy hour the fourth Wednesday of the month, 6:30 Central. This is an event that I really, really love to host. I think it's really fun. You really get to learn about kind of how people are doing it, across the country. So make sure you're joining us and getting all that free education to make sure you're picking the assets that's right for you. So again, here are our in-person self-directed socials. So Houston area, first Tuesday of the month, Austin, second Tuesday of the month, Dallas, third Tuesday of the month, in office at 6:30 p.m. We'd love to have you join us. Our third annual Quest Expo in person. We are back this year and we are so excited. It will be in Houston. It'll be at the Westin Hotel. We are thrilled to have this back. We are going to have so many guest speakers, over 30, so many different topics we're going to touch on. We are planning this event and just replanning and getting all of it together. So make sure you sign up for this. To get 15% off. We do have some early bird tickets left over. So make sure you get them early so you can get that low price. If you use this code, BACO, it's my last name, BACOT, and the number 30, you can get 15% off of your ticket. So make sure you use that. Go ahead and scan the QR code, get the special, get the discount, but make sure you don't miss out on this expo. We actually have a special coming up for the mothers in your life. If you open an account, now this is available May 6th through 9th only. So make sure you take that action quickly. So open an account, you get 50% off your Quest Expo ticket. So again, that Quest Expo, that's going to be really, really exciting. So make sure you don't miss out. All right, so how to get in touch with an IRA specialist. We are happy to answer all of your questions. We love to do it. We actually hang out in the hallways and discuss tax code and what about this situation. We'd love to help. So of course, on our website, we have the live chat feature. It's not robots, it's really us and the transaction specialist. Happy to help you answer your questions. Give us a call. I love our phone number, 855-FUN-IRAs. We really do think this is fun. Of course, email me directly, nicole.baco@questtrust.com, or our general email, IRAspecialist@questtrust.com. All right, that is quite enough of me. I know that there we go. I know that you came to see the men of the hour and get more education on our newest investment that you can make in your IRA cryptocurrency. So thank you so much, Joe and Bill, for joining us. We are so excited. So gentlemen, take it away.
Well, thank you, Nicole, for having us today. I appreciate it.
Thank you, Nicole.
All right, let's see here. We need to get, there we go. Okay. So, thank you everybody for joining us today. Appreciate everybody coming out. We're going to go into how to invest in the coming crypto and digital economy tax-free. My name is Joe Robert, and I have my guest here, Bill Guida. We have to start with our typical disclaimer. Presentations are intended for educational purposes only and do not replace independent professional judgment and may not actually reflect today's facts. Statements of facts and opinions expressed are those of the presenters individually. Unless expressly stated to the contrary, they are not the opinion or position of the trust custodian, Robert Ventures, or its employees or contractors. The trust custodian, Robert Ventures, and the presenters do not endorse or improve and assume no liability for the content, accuracy, or completeness of the information presented. Attendees should note that this session may be audio and video recorded. and may be published in various media, including print, audio, and video formats without further notice. Again, in no way is trust custodian promoting us, our presenters' companies, or our company's offerings. And please, we'll hold all questions to the end, and we'll open up for Q&A. Again, my name is Joe Robert. I'm founder and manager here at Robert Ventures. I've been investing in assets for about 20 years, primarily in the real estate space. I've acquired, invested in over 200 properties and 165 million in mortgages. I've managed a distressed mortgage fund and have led multiple real estate partnerships. For a period of time, I resided in Puerto Rico about 4.5 years ago, and I had the opportunity to meet people in the crypto space. And it was the energy and an understanding of how the world is becoming more digital that led me to start investing in the crypto area. Since then, we've been managing a portfolio of liquid crypto currencies. Also, we've been a limited partner in multiple notable venture funds and an angel investor in certain projects. Last, I've utilized my own personal IRA account for the last 10 years to invest in all these different asset classes. And primarily, my IRA today is made up of blockchain and crypto assets. And I also am a great customer here at Quest. So I have my co-host here that's going to take it, Bill Guida.
Yeah, thanks, Joe. Happy to be here. Really excited for today's presentation. So I've been involved with digital assets, cryptocurrency since 2015. I bought my first Bitcoin in 2015. So it's quite some time ago. Seems like yesterday. In that time period, I've gotten to develop with the developer community, the investor community, and really it's been a wild ride, but really driving deep relationships with that community is wildly important for my role as head of strategy. So I've also served as head of research for the past 4 years with Robert Ventures. And in that time, I've volunteered at a number of different computer science schools, the Holberton School in New Haven, and the tri-state area, Southern Connecticut State University, and Sacred Heart, both colleges I attended. So like Joe, and keeping with the theme of this presentation, I too have, for the past 4 years, taken advantage of my Roth IRA for direct crypto exposure. So I'm really passionate about this topic, and I'm looking to dive in deep here today, and hopefully we all have some fun.
So most of all of our retirement accounts are now allocated in this space. So that's
right.
our conviction.
That's right.
So Bill, why don't you lead off with kind of what's happening in today's world?
Yeah, so it comes as no surprise. Everybody here is fully aware that inflation feels a lot higher than what they're telling us, right? So we're reporting 8.5% inflation right now for 2022. And again, this comes down to a failed monetary policy across the board. So the central bank system is failing us. We are printing money at record numbers right now, and this is not helping inflation currently. Globalization has never been more extreme right now. So we are seeing interconnected economies, businesses, countries, finance, people. Everything is connected like it's never been before. So what happens in Europe impacts the US. What happens in Asia impacts Europe. And it's happening quicker and quicker. So there is no more sovereign self nations anymore. Everybody is wildly connected. And again, on that theme too, digitalization. We are entering the new digital era, and right now it seems like everything is online. Everything is within a few clicks, and you're using your cell phone for everything. This again is just pushing us in that direction of the new digital economy.
Yeah, I mean, our team members are located all around the world. Everyone could join, whether it's Zoom or StreamYard, and become connected. So
that's right.
That's where we're going.
All right, so let's talk a little bit about crypto and blockchain and why we believe this is the future. So let's talk about 3 real key areas here for crypto and blockchain. So one is this concept of a non-confiscatable asset. So you may have heard that in the past, but let's dive in a little bit deeper and let's use some examples from the real world right now. So people are holding wealth in Bitcoin as we speak. So there's a sovereign ownership that comes with holding your own Bitcoin, right? So we've seen countries debase their currency. We've seen the conflict in Ukraine and Russia absolutely destroy the finances of both countries. So we actually know that there are individuals, there are groups of people that are holding their wealth in Bitcoin. And that is because of the blockchain technology that allows individuals to own that asset. and it makes it virtually impossible for nation states, governments, or private entities to steal that or confiscate that wealth from individuals. So very important, and it's a great example, unfortunately, what's happening in Russia and Ukraine. Second, we've got this P2P elimination of the third party entities. So we could use this for banks, we can use this for a number of different companies, but blockchain technology is allowing for individuals to communicate and transact without banks, without companies, without financial institutions throwing up that red tape, and really making it more difficult for individuals to communicate financially with each other. So this is allowing for equality across the globe, and it allows for individuals in Africa to communicate financially with people in the United States, all 24/7 without any regulations and without any type of red tape, which is fascinating right now. And then again, another key area here for blockchain is digital land records. Similar to confiscation with assets, we see this in history time and time again. Land records are wiped out, names are scratched off, and governments are able to take control over individuals' private land. With blockchain technology, we're able to leverage this to put official deeds, other paperwork onto the blockchain in a digital form so that you can't go back and erase it. And there's a timeline and a set record of all these important pieces of information. So these are three key areas that we're paying attention to and why we believe crypto and blockchain is going to be the future.
It's similar to like the truck drivers that were up in Canada, how they had the ability to be able to freeze their assets in their bank accounts. So this is part of the purpose of being able to self-custody some of your own assets. So you have the ability to be able to spend or do what you have to do outside of the government's.
That's right.
Also, when it comes to land records, a lot of the stuff we might not realize as a U.S. citizen because of the infrastructure that we have in the laws, but these things do happen across the world, and a lot of the applications that are being built here will also serve those jurisdictions maybe a little bit better at this point, but these are some good insights into what's happening.
Absolutely. So let's talk a little bit about what is crypto and what is blockchain. These terms get tossed around a lot. So in its purest form, blockchain is simply an infrastructure layer of software on which applications can be built upon. So in general, the technology is decentralized and it leverages multiple points of failure, meaning there's not one central hub that runs the software or the blockchain. So for the Bitcoin network, for example, there's thousands of nodes or computers that are running the blockchain, which makes it hard and almost impossible to take down, which is why it gives it value and tremendous value at that. Let's talk a little bit about cryptocurrencies and tokens. So we've heard about this. You probably heard about tokens appreciating in value or thousands of cryptocurrency tokens out there. You can think of tokens as access or ownership of certain blockchains, right? So you've got a number of different blockchains. Right now, there's hundreds and hundreds of them out there. And if you own the underlying token associated with that blockchain, you get to share in participation on the blockchain, you get to share in voting on that blockchain, and you get to share in the appreciation or the price volatility of that underlying blockchain. So you get access to everything that happens on that blockchain through the underlying token. And of course, we have Bitcoin, right? So Bitcoin is probably the most popular, most powerful cryptocurrency out there right now, and it's got the most name recognition. So in its purest form, Bitcoin is digital gold. It's finite in supply, and it's harder and harder to mine every year. So every 4 years, the supply is cut. Everybody knows the inflation rate, and this is why it has value. And we'll talk a little bit more detail about that afterwards. So since I've been in the space, things have changed rapidly. So 2015, it was really the Wild West. So today, things are far different in the regulation, and the adoption rate is wildly more successful. So Joe, let's talk a little bit about what has changed from a regulation standpoint, an investor standpoint, and adoption standpoint.
Well, for the last couple of years in the space, I would say the saying has been, institutions are coming, right? And it wasn't really happening so much the last few years, but over the last 12 months, it's really been happening. It's still somewhat slow, but we are having public companies, obviously you may be seen in the news like Tesla,
Yep.
Square, MicroStrategy put Bitcoin on their balance sheet. Also, MassMutual made a $100 million purchase for their account. While it was small, they're at least starting to participate. When it comes to regulations, Biden put in a order, a couple months ago that all the different areas from the SEC, CFTC, the IRS, and the U.S. Treasury all come together and start laying that framework for the new laws and regulations for the sector, and ultimately also how it may be taxed. Some institutional investors that are starting to already offer products to their clients here in the middle, JP Morgan, Bank of America, Wells Fargo, and Citi. There's many more to come. I have a good friend over at MassMutual. After speaking to them, they're just waiting for that final regulatory framework to be set by the government. And ultimately, they're going to allow all these different products to flow to all their clients. So it's just a matter of time that, there's billions and billions of dollars sitting on sidelines from these companies or, across the globe that will be coming into the space. And last, if you look back, 2018, when a lot of the projects were raising capital, there were mostly raising capital all around a idea or what's known as a white paper. There was really no development of anything. Now we're about 4 years later, and we see a lot more robust networks and blockchains where we have a lot more users coming to the networks and participating. There's more usable applications. You'll see them in DeFi where you can put your assets, lend your assets out and get a return. So ultimately, we've come a long way in the last 4 years, and we think the adoption curve, which we're about to see, is, going up in a steep climb. So as we see here, there's a projection on the left to middle. You can see where we're at. So we're comparing crypto users to the global internet users. And currently, based on this chart, we're outpacing when it comes to this time frame. The projection is that we're seeing about an 80% average yearly growth right now. And then through the end of the decade, about 33%. Ultimately, what is this telling us? It's telling us that most of the reports and projections out there are saying that we're at least going to grow a 10x from now through 2030, which from an investment standpoint is obviously a really good thing. We're seeing similar returns in token portfolios or in other hedge funds with high double digit, maybe even low triple digit for some growth on their portfolio. You might see in the space, drawdowns, but typically the way the space works is, it goes up in multiples and then comes back a certain percent, consolidates and goes back up in multiples. And that's how we get that average annual growth. So beyond just thinking about token, when we're thinking more about blockchain and, how it can apply different applications and different industries, some examples here are like, Bill mentioned that peer-to-peer type of network, the ability for me to be able to just send a payment directly to Bill, whether he's located here in the US or anywhere around the world without any third-party intermediary approving it or stopping it or anything. That's what we have the ability to do here. When it comes to identity, example might be you're going into a bar and that bartender or bouncer checks your ID. Now they know your name, they know your address, they know your birthday. They have all your information if they want to track you, follow you home. In this case, it could be a permissioned thing where you only allow certain systems maybe just to prove your identity and just say that you're of the age or not of the age instead of giving everyone all your information. When it comes to healthcare, we're obviously nomad and people traveling around the world these days is becoming more and more prevalent, right? And so, like myself, I grew up in Philadelphia and I went to Puerto Rico and now I'm in North Carolina. And so you have doctors in each different areas, and then you go and see different doctors for different, health reasons, and your records get very fragmented. So our hope here is that you have it in one centralized location, call it, but on a blockchain, and then you could just permission doctors as you see them to access your records. But then that new record always goes back in the same location instead of being so fragmented. When it comes to supply chain, I'm sure over the last year or two, we all have ran into a point where we don't know where things are located. If we're running businesses, we're trying to get stuff from China to here, everything's backed up. Thing with supply chains that we're going to be able to record and verify at each part of the process where that asset or package is located. Government, another big one. It seems very simple, and we don't understand why they have not implemented it yet. But when it comes to voting, based on the last presidential election, there was a lot of noise about whether there was cheating or not cheating and counting ballots. I mean, we are living in 2022, which I would think almost all this would be digitized by now. We wouldn't be hand counting ballots, but blockchain could give that ability to recognize only one vote per person and be seen, whether in real time or whatever, but basically it's immutable and couldn't be changed and cheated. Same when it comes maybe to applying taxes, with some type of digital asset, digital currency, governments could take 1% or 2% out of each transaction and be able to pay those state taxes, or the certain percent go to the government taxes right away without waiting a month or two. Cloud storage, I'm not sure if any of you have ran into this, but I know someone recently, they had all their assets in their Gmail account. They had pictures. For some reason, Google closed their account. For some, they didn't give the exact reason why. Google does that. And so the cloud storage will give you the ability for you to own and have control of all your own assets. And last, most of us all have bought a piece of real estate. It has sometimes sped up over time, but still, taking 30, 60 days. I see this as a process that should be able to be executed in minutes, half an hour, an hour at some point if we, remove some of the politics or the red tape. But, once this is digitized and records are digitized, you should be able to go buy a place and instantly, get a loan and execute that deed and so forth. There's many other applications like music royalties and cross-border payments, but hopefully this gives you an idea of, where this tech can be applied. And so just on getting started, these are 4 basic crypto exchanges here in the US that are regulated: Gemini, FTX, Kraken. Last, we have Coinbase. It's probably one of the most popular ones. Mm-hmm. They also ran the QR code at the Super Bowl, and then their site kind of crashes. Everyone tried to get an account and open up for free money. But these guys are, we've used most of them, and they all probably are a little bit different when it comes to just fees or the type of tokens that they offer. So you want to check that out. Right now, Bill is going to break down these 4 areas that are probably the hottest topic and where most of the investment is happening in the space.
Yeah, thanks, Joe. So these are 4 areas that not only are we looking at, but again, are probably the most popular right now, and there's a lot of value behind it. So let's dive into it a little bit. We'll talk about open finance. We're going to talk about store of value, blockchains and tokens, the metaverse and NFTs, which are wildly popular right now, and of course, the blockchain infrastructure layer, which is my personal favorite. So let's dive right into it. So let's talk a little bit about store of value right now. So there's 3 real ways you can have a store of value inside of the cryptocurrency universe. You've got stable coins, which are wildly unique. They are pegged to the US dollar and they run on top of different blockchains, right? So we have the most popular, which is USDC, which is a regulated stable coin. It's based out of a company called Circle, which recently got funding just about a month ago from the largest financial institution in the world, BlackRock. So if that's not an indicator as to where this direction is headed and where the digital economy is headed, I don't know what it is. So again, those stable coins are pegged to the US dollar. They're worth $1 and they really don't fluctuate in value. You can also get into some lending and borrowing and earn yield on those tokens. So it's a great way to get involved and really send dollar equivalent to Joe or to anybody in the world very quickly, instantly. Privacy coins is another area that has kind of a unique background, right? So what people don't really understand is that Bitcoin and blockchain tokens are public, right? So you have to do a little bit of diving, but you can see transactions and you can really do a better job of understanding who's sending what if you analyze the blockchain. So privacy coins are actually private. They block the sender and the receiver of transactions. So companies could utilize these. Individuals in different countries are able to utilize these for different areas. And I think it's a unique area for investment. And third, of course, is the pure store of value in Bitcoin, right? The finite supply, the largest blockchain globally, and it's here for a reason, and it's here to store value and grow wealth. There's only 21 million. ever to be created for Bitcoin, and there's only about 19 million in circulation right now. Again, what makes this different is we know what the inflation rate is. We know exactly how many are circulating, and they can't be repeated, and you can't create more Bitcoin. So that's where the value is. And really, it's digital gold, and we'll talk about that more afterwards. Second, of course, is open finance. So I was talking a little bit about this before, but open finance, or DeFi, really is just trust in a blockchain or a protocol instead of a large entity or a company or a financial institution, right? So in order for me to send Joe money, I need to go through 2 different banks, 3 different payment processors. There's fees associated with each thing, and it could take 2 to 5 days. And if you're doing it over the weekend, forget about it. With DeFi or open finance, this opens up the entire world to be able to transact with each other and be able to leverage traditional financial institution services like lending and borrowing, credit. All these different things can be done through software, not through companies. So you eliminate the red tape, you make transactions cheap, you take out the bureaucracy, and you open everything up to an equal playing field for the entire world. So it's a very, very lucrative and a very, very powerful use of blockchain technology.
Yeah, just to add on there, Bill, I mean, obviously, when it comes to sending wires, a lot of us probably may do some investing here on the call today.
Yeah.
And depending on your bank, you maybe can do that over a mobile device, or maybe you're capped at certain limits, or some might still have to go into the branch. I mean, right now you can send your USDC. I can send $1 million, $5 million, $10 million to Bill, to someone, across the world instantly without needing this bank's permission. So it's very important to understand that.
Yep. So my favorite area to invest is the underlying blockchain technology. So this is a great area to not only become involved in, understand, do your due diligence, but it's the most vibrant community and vibrant investing opportunity, I believe. So this here is just an kind of a map of the entire ecosystem. So you've got DeFi, you've got centralized finance, you've got applications that are built on top of these blockchains, right? So what is that exactly? What is the blockchain? Think of it as the infrastructure or the foundation on which decentralized applications are built. So consider this similar to Mac or Android. So you've got Google as well. So you can think of Google Docs or Google Sheets as an application that's built on top of Google technology. So we have that same kind of example in the blockchain industry as well. So the other interesting thing is you're able to kind of get value through what's built on top of your blockchains. And if you own the underlying tokens that are associated with infrastructure layer blockchains, you get access to the success or failures of the decentralized applications that are built on top of them. So it's a great way to have a more of an index investment strategy. And it's a great way to really participate in the blockchains because you're able to vote when you hold different blockchain tokens. You're able to stake and potentially earn rewards for holding those tokens. So it's a great way to get involved from the bottom. Another key area here, I'm sure everybody's heard of the Metaverse, right? It's one of those hot topics right now. Everybody's talking about the Metaverse. So what is the Metaverse? Essentially, the Metaverse is the next logical step from where kind of social media is right now. Instead of social media talking about what's happening in the real world, we're able to go a layer deeper, right? And we're actually entering an entire unique ecosystem, unique digital world that is essentially called a metaverse. So if you've ever played The Sims or World of Warcraft, it's essentially the same thing. You have an avatar, you have an identity that's uniquely digital, and you're able to do, a number of different things inside of this metaverse. So this isn't just for, playing around. This isn't just for exploring for fun. We have large scale companies such as Walmart embracing this technology. So on the left here, you've got a digital shopping experience that's all being created, developed by Walmart. So they're experimenting the metaverse experience where you're able to go through digital aisles. You're able to log into their metaverse shopping experience, do your shopping. And who knows, Joe, like maybe 2 to 3 years from now, you'll log into the Walmart metaverse, you'll get your shopping done, and then it'll get delivered by drones to your house and you'll never have to leave. Who knows? It is crazy how fast things are happening. But again, the point here is this isn't just a small group of people playing inside of a digital universe. This is Fortune 500 companies that are embracing this. On the right here, you've got an avatar of Mark Zuckerberg. So another testament to where the direction of the digital economy is headed is that Facebook changed their name to Meta, right? They took a stand, they pivoted, and they said, we are embracing this 100%. And that's probably because they missed out on cryptocurrencies a few years back. Another interesting metaverse concept here is exhibitions, concerts, events, right? So we have seen many examples of successful concerts and events that take place inside of the metaverse, right? And a lot of this has to go back to, the quarantines with COVID, but we are seeing record numbers of concert sales that are happening inside of the metaverse. So this is not isolated to kind of, again, playing around, kind of a game type of thing. There's whole e-commerce happening. There's whole economies that are being built. And that leads me to my last point of real estate. So Joe, you come from a traditional real estate background. What we have seen here is that the same principles for investing in real estate in the real world are the same in the metaverse. We're seeing digital plots of land sell for millions and millions of dollars. We're seeing ocean state plots go for more than kind of rural plots. We're seeing celebrities becoming involved and then creating their own kind of isolated areas similar to Beverly Hills. So it's really wild what's happening, but it's being embraced by pop culture. It's being embraced by Fortune 500 companies. And we believe that real estate inside the metaverse is going to become probably more valuable than actual land moving forward. So it is something to watch in amazement right now.
Well, Snoop Dogg's been participating quite a bit, obviously, over the last 6 to 12 months. I think he was anonymous at first on Twitter and then came out, and then he's been acquiring land and participating quite a bit. But, it just goes to show that certain institutions, certain celebrities, they're all kind of going to be participating because they understand where the world is going.
Absolutely.
When it comes to concerts too, last couple weeks, I went to a couple live concerts. For some that might want to be at a concert every weekend and maybe can't travel to one, you're going to be able to, I think, they'll have the technology available where it'll feel like you're sitting in that first row.
Mm-hmm.
You're going to be able to look around and you're going to feel like you're really in that at the concert. And, I think that's going to be exciting. No different than the live events that, Quest might be putting on, right? Some might only be able to make it virtually and some are going to be show up in person. So.
And again, these companies are leveraging the underlying blockchain technology to help create the ecosystems that are vibrant inside of these digital economies. So it all ties back to that crypto blockchain industry. So last but not least, of course, we have NFTs, right? So this too has become really, really popular, especially with celebrities. We can talk about a number of the different use cases for NFTs. And why don't we talk about what an NFT is? So it stands for a non-fungible token. And in general, these are built on top of the Ethereum blockchain, which is one of the largest layer 1 blockchains out there. Essentially, what these NFTs can do is it's data that's stored in the blockchain, and it allows you to create digital art, for example, there on the left. It allows you to gain access or membership to certain clubs online. It can power creator-owned economies, so digital streaming services, video content, music, all that can be packaged inside of an NFT. And then, of course, certificates of authenticity, right? So we talked a little bit about that before, but the idea of land records, the idea of deeds and titles, all being packaged up in an NFT, which you're able to trace ownership to one individual person, right? So the whole idea here is that these can't be replicated, they can't be stolen from you, and there's uniqueness to each one of these NFTs. So we can dive a little bit more detail in the next slide.
Yeah, and I mean, if you think about it, almost everything across the world is owned by somebody, some entity, or some trust or something, and so this type of authentication and verification is very useful in this world.
That's right. So we've been looking at what, Joe, probably 150, 200 different projects, different tokens, different companies over the past 4 to 5 years. There's a lot that goes into the research and the due diligence at this level, but why don't you talk to us about the most important areas that we look at, and people can also look at these and try to do their own due diligence. But Joe, talk to us about fund level due diligence.
Yeah. So, usually we take, anywhere from a few days to a couple weeks to do due diligence on one single project. If we're also reaching out to the team, it might take, a month or two, but we're going to hit on these 5 areas, and that is, team, the on-chain analytics, the fundamentals, the community, and the funding. So what do we look for in teams? A few things that we look for are, our thing is we like those founders to be identifiable. We like to be able to see them in person or via Zoom. Sometimes in the space, anonymous founders create projects and you never know who it really is. For us, we like to actually build a relationship with people for a period of time before we'd invest in them. So that's something we like to see is identifiable founders. Number two, when possible, example of one of the Winklevoss twins, they've been in the space for, 8 to 10 years here. So we like to see that type of proven track record and that they've had participated in the space for a period of time. Number three, certain founders that have prestigious conventional experience in previous roles, whether that be PwC, Bloomberg, or any place that kind of molded them to like a type of organizational person and professional. Now, you don't always find that, and it's not a must-have, but it's just something we do like. That's a benefit. 4, in this space, because technology, we're evolving quickly, things are changing, regulations are coming, as we kind of move globally, you have to be able to pivot and plan. And so founders that are willing to pivot, adapt, and evolve are ultimately the best ones to invest in, because one that maybe comes out the gate so narrow-minded and focused, not willing to pivot, could run into problems here in the space. So the ability to be able to pivot's a big one. Anything else, Bill?
Yeah, this is super important, but ultimately, like, we want to get to know the teams. We want to get to know the people that are involved, what drives them, what motivates them. Are they here for the short term? Are they going to be able to withstand the bear markets that inevitably happen in crypto in these cycles? So it's important that we meet them not only from Zoom, but we like to meet them in person as well. It's part of what we do each and every year. So we try to get out and meet as many people as we possibly can.
And with like most spaces, right, there's conferences every single month. So, and across the globe in every single jurisdiction practically. So, you could get out there, meet the people. That's always best. It's a good way to see what projects are coming in, coming out in the space and what's being developed. So, piggybacking off the team, this is approximately 2 years ago. It's 4 interviews we did with the team directly. As we were mentioning, we try to reach out to that team and host a podcast where we get to understand, who the team is, ask questions about their project, understand their tokenomics and what they're doing on the roadmap in the future. You could do a lot of research in the space and find stuff online, but there's nothing better than, what is it? Getting it from the horse's mouth. Is that what they say? So here's some, like I mentioned, some interviews. And if you invested at that time when we did that interview, this is an approximate return from a 6x to a 40x over a 2-year period on those projects, if you would have bought that token. So I'll run over this briefly, but this is on-chain metrics. This is available through a block explorer, and this will give you insights into, a token, what that price is, what the max total supply, how many holders hold that token. And when they say holders, that's going to be a wallet. And on the top right, you can see the wallet address and how many tokens are being held within that wallet. There are some services that try to aggregate wallet addresses and match it to a certain fund or entity, and can provide that as a service if you want that information. And on the bottom, you can see the transactions and then at what time they occurred and from what wallet to what wallet, and then how many tokens were transferred. So again, the token fundamentals, on the top left, we are looking at coin market cap, and you can see the price of Bitcoin as the example. You can see the market cap, the fully diluted market cap, the total supply that's available for the token. It's maybe a way to think about this is somewhat similar to a stock, right? I mean, every stock has outstanding shares, how many are available to the public, what price they're trading at, what is the market cap of that company. So, it pretty much correlates similarly. On the bottom left, we have Token Terminal. And Token Terminal is a great resource where you could get price to sales in this example, or price to earnings type ratios. If you basically want to see what revenue certain protocols are generating. And then, some of these projects do have the ability for token holders to earn some of that revenue back to them. Some of the things that I might not covered on the right is looking at the fully diluted valuation to understand the inflationary structure moving forward, the wallet distribution. These are things that will give you an idea of how concentrated are certain, how many tokens are in certain wallets. And then ultimately, is there only a few whales that own them, or are they more evenly distributed? And then you could check out the inflationary deflationary structure. Some projects have a buyback or a burn type feature. This may help the token price increase over time. And as I already mentioned, price to sales or price to earning ratio on the bottom right. You can notate these, but CoinGecko, CoinMarketCap, these are two great sites everyone's been using over the years. And you also have the Token Terminal and Token Metrics. Next here, very, very important aspect to this space is the community and developers. This is basically software and tech. So, you need developers. There are over 18,500 monthly active developers now in Web3. Continuously on a day-to-day basis, we're seeing more and more come to the space. They're leaving these Web2 companies. This is a very exciting space industry. The things that we look at are how many developers are contributing to the code of a project and how often. Then we look at what incentives are there for developers to come and build on that project. It's very important that that project has a treasury that can sustain paying out those developers for the years to come. Next, we also look at social media. We look at measure the activity through their Twitter and Discord accounts. We'd like to have an understanding of what are those users talking about? Are they talking about price pump? Are they talking about, developing the project? There's a sentiment and community sentiment around, the long-term holders and developing versus just being there for a short term. We also like to look at web traffic. You can use SimilarWeb or Google searches, and this will give you an idea of, where from around the world are people searching for this project and what that volume is. Last, also very important, how frequently is the project updating their community members with critical information? This could be what they're executing on their roadmap, what type of fundraisers they're doing, what their vision is. Typically, they do these updates through their Twitter, Discord accounts, or maybe even Medium on a monthly basis.
Yeah, a good example here is anybody who remembers the early 2010s, like it was the thing to work at the FANG stocks. It was the thing to work at Facebook, for example. Everybody wanted to work at Facebook. Now we're seeing a migration from the financial entities in the traditional tech into Web3, into crypto, into blockchain technology. So not only are the salaries better in crypto, but the energy, the passion, there's drive, there's motivation. So we look at Indeed, we look at the recruiting websites, and it's unbelievable the amount of talent that's flowing out of the traditional world into crypto. So we use that as a lagging indicator as well to pay attention to.
So follow the money, follow the developers, right? And follow a great community. So when it comes to checking out, let's say you want to know what funding rounds have been completed by certain projects. Example we have is Polygon on the left. You could go to Crunchbase or Dubmetrics. Dubmetrics has been tracking pretty much all the blockchain startups here, and you get an idea also, one, how much they're raising, what the valuations are, and two, who they are and what the new projects are on the scene. And on the right, as we mentioned before, the projects will typically announce through their Twitter, Discord accounts, how much they've raised, how they're allocating tokens, and so forth. Number 3 on the left, project white paper. So typically every project in the space on their website will host what's known as a white paper. And you should think of it just like a business plan. They're going to outline what they're doing, what they're developing, who the team is, and also how they're allocating their tokens. Number 4, the block explorer, as we shown you earlier. This gives you an idea of the concentration of tokens and whose wallets. All right. So obviously we're in inflation times, but outside of inflation, we're always even just looking for yield as an investor, right? We want to outpace the cost of living and so forth. And so Bill's kind of break that down for you.
Right. So we talked a little bit about stable coins. We talked about some of the perks that they offer. So there's 2 ways that you can actually get yield inside of the blockchain cryptocurrency industry. You can leverage a decentralized financial tool such as Aave or Compound, which offer rates up from 2 to 18%. And then you could also go with a more trusted entity such as Celsius or BlockFi, which will give you about 7 to 8% interest on your US dollar pegged stablecoin. So you're also able to lend Bitcoin, Ethereum, and a number of other cryptocurrencies for passive yield. So again, these are ways that you can become involved. These are ways that you can actually generate some yield, and you can go the decentralized route, or you can trust what we call the CFI, or centralized financial institutions.
And like everything, depends on how you want to participate, but ultimately also how much risk you want to take on, right?
Right.
Sometimes the higher the rate, the more the risk, but there are applications out there can get, 18, 20, 30%.
That's right. So here's a great side-by-side of kind of the legacy banking system versus the blockchain companies. So with the traditional banking system, if you're holding US dollars in your savings account, CD, anything like that, you've got interest rates that are well below 1%. You've got cash back that's at 1% or less. And again, you're losing to inflation. Inflation's 8.5% right now. If you've got dollars in the bank, you're losing money each year if you're not gaining a profit of over 8.5%. The sad part is there's 150 plus million clients still stuck in this ecosystem of the traditional banking system. So if you look over to the right, you've got BlockFi, Celsius, a number of these other entities that are offering traditional financial services with a blockchain twist. So they're able to offer interest rates of up to 10%. They've got cash back of up to 5%. They've got debit cards, credit cards. And again, you're outpacing inflation with these companies. So if you're saving in stable coins, you're leveraging, kind of using BlockFi or Celsius, you're doing better than keeping your money in a traditional bank. Now, the interesting thing is they've only got 10 plus million clients globally. And we think this is going to absolutely explode in the next 3 to 5 years as people begin to see the disadvantages of holding cash inside of one of your traditional banking companies. So it's it's like yin and yang here. It's night and day. Where do you want to keep your cash? In the legacy systems or in companies that are embracing the digital economy?
Yeah, I mean, I think it was Celsius, I think about 2020 to 21, maybe in about a year's time frame, it went from about 1 billion AUM to 20 billion AUM, just to give you an idea of how fast the space is growing and how fast assets under management is growing too.
That's
Also on the left, traditional banking and we'll call them Wall Street companies, their goal is to bring more value to the shareholders, right? With blockchain protocols or these CeFi platforms, their goal is to bring more value to the users, investors.
That's right. So why choose a fund for yield or token exposure? So choosing a fund and allocating to a fund is one of the best ways to get exposure to crypto, especially if you're not willing to go full time or you're not willing to dedicate hours of your time and your week into research and due diligence. So again, when you send money or you choose a fund, you're leveraging the experience of industry experts working for that fund, right? So they've been involved, they've been in the industry for quite some time, they're structured properly, and you're dealing with essentially experts in a very early on technology. So it's a great way to kind of trust the individuals that are making the decisions because they've been there, they've been in the space, and they're prepared. Number two is institutional custody and exchanges, right? So one of the biggest things for me in the beginning was trying to find a trusted place for me to buy and hold my cryptocurrency. When you use a fund and you leverage a fund as a way to get access to crypto, you know you're dealing with the best of the best from a custody standpoint, from a security standpoint, because they're only using top quality regulated US exchanges. So Coinbase, Fireblocks, Crypto.com, a number of these are all what these funds are using in order to provide secure custody for LPs. Of course, when you join a fund, you're able to be part of a larger community, right? So you get insight, you get individual conversations, you're part of side deals, you're part of the bigger picture, right? And that's kind of what's attracted people to crypto, especially myself. There's a passion and an energy and a sense of community like I've never seen before involved in crypto. And when you become an LP, you become a brand ambassador, you become a individual that's proud to be part of an association with a fund, and you're part of a larger community. And that's something that's not often spoken too much about, but especially in crypto, it's really a powerful thing. Again, you get a diversified portfolio here. You get the ability to mitigate some of the volatility and increase performance when you're dealing with a professional LP or a fund. And then my personal favorite, anybody who's been in crypto, you're able to leverage the tax lawyers and you're able to leverage the fund administrators to take over that tax work. They'll provide the K1s, they'll provide all the NAV information, because a single transaction is a complicated thing, and it can really screw up your individual tax refund and tax filing if you're doing it yourself. So trust in the experts, and most funds and most GPs are structured properly so that they have all that taken care of and you don't have to worry about anything. And again, the biggest thing here for funds and becoming an LP is that it's passive exposure. You don't have to be that expert. You don't have to be, going 100% day after day to try to keep up with this industry. And, Joe, it is 24/7. Crypto never stops. So it's a great way to become involved, but not dedicate your life to it. So fund exposure is a great way overall to get exposure to this growing industry. So why are we here? We're talking about IRA tax benefits. We're talking about the best vehicles to invest in crypto. So Joe, let's start this conversation off.
Well, thanks, Bill. Obviously, the IRS treats cryptocurrency as property for federal tax purposes. Therefore, general tax principles that are applicable to property transactions must be applied to crypto transactions. So what we're saying is almost all or most crypto transactions are considered capital gains and therefore have the tax benefits that you have within an IRA of that tax-free transaction. And that is what obviously we're all on the call today, because it's very exciting to be able to not only increase our net worth, but do it in a tax efficient way. So a few things that, we broke down how you could get involved. One way is you could set up a IRA owned LLC. In that case, you have a IRA establish the LLC, open a bank account, and have the IRA custodian wire money to the LLC. Now, the benefits here is that you have the ability to set up accounts at exchanges to buy and trade. You can invest in most funds out there when you're qualified, or you could invest in startups directly, maybe like Peter Thiel and his multi-billion-dollar IRA account.
Great example.
I know, we're all trying to get there, right? Some benefits here might be, depending on the transaction, whether it's crypto or maybe you're doing more real estate, however that may be, it might be better asset protection. These are all things, you consult with your own counsel. The ability to maybe cut checks faster. Sometimes it may save some fees, or it might be easier to partner with others. And last, an LLC might give you access to deals that you might not have that ability with your existing IRA account. Investing directly through your IRA account. You can invest in these different private placements or different funds, or these private stock deals, again, depending on your required investor qualifications, directly with your IRA account. Some benefits here. maybe no LLC or those lawyer fees for setup and maintenance. You can make those direct investments into those alternative assets. You don't have to worry about the prohibited party as a manager of the LLC, or maybe having someone else manage your assets. And the custodian also approves those transactions to help you prevent prohibited transactions. So they're on your side and they're there to help you. Last, you can invest through a crypto exchange. This gives you the ability to use your IRA account to invest directly, into crypto assets. Our example here is ErisX, where you can make a deposit from your IRA account and then choose which cryptocurrencies you want to purchase. Benefits: you don't have those LLC fees. You don't have that third-party manager to make those trades for you, and you don't have to worry about custody yourself. And, as we conclude here, I appreciate everybody coming on again today. Two takeaways that we like to go over is, one, a lot of the reports that we've seen by companies and institutions that this space is supposed to grow at least a 10x minimum through the rest of this decade. Being a real estate investor over the years, my take was over the last 10 years, it was that opportunity to be in real estate. And now, we may be at market highs, obviously. So in this space, we think, through the rest of this decade, the next 10 years, there's a lot of opportunity. And then number two is, just using that IRA account and taking advantage of the capital gain treatment that crypto can bring you and ultimately compound your wealth. So, for the listeners that would like to subscribe to our newsletter, we have a digital asset newsletter that goes out every week with an article about investing in crypto or blockchain. And also it shows our podcast where you could tune in and listen to that information from projects we interview or just information in the space. You go joerobert.com and subscribe there. If you are, accredited or you have any questions for Bill and I specifically about this space or about investing in anything, you could go to robertventures.com, fill out that inquiry form, and we'll get back to you right away and we can discuss anything you would like. I appreciate everyone joining us, and we'll open up the floor for Q&A.
All right. I think I did see one question here.
There we go.
Absolutely did. All right. And then let's see. All right. This is from Jeff. So he would like to use crypto trading bot inside a Roth IRA. Do you have experience with this? Now, I am not familiar with what a crypto trading bot is.
Yeah.
Do you know what a crypto trading bot is?
Well, I mean, I think,
Yeah.
I think there's a couple things here. Without knowing the specific situation, I guess what comes to mind is, no, we don't have any experience with that. We're more of a swing/long-term holder, so at least like 6 to 12 months and maybe onto a few years. So we don't do short-term trading. Ultimately, probably in order to execute this, you definitely want to consult with a lawyer because, one, you want to make sure you're keeping everything within your IRA account. So you might need like an IRA LLC or something like that to be able to execute this trading plan. But that would probably be best as a check with counsel on that, how to set that up.
Yeah, I would say, depending on what type of trading bot that you're using, whether it's leveraging some of the decentralized platforms or like a MetaMask, or it's using, Binance or some of the big exchanges, those would have to be inside of that Roth or that tax advantage vehicle. So in theory, absolutely, it can work. We just don't have experience in that, but I really like that angle, and I think it could work. But again, that's something you would want to leverage your tax advisor on that. But in theory, I think it's a great concept.
And always remember, start with a very small amount, because sometimes some things are too good to be true when you're just setting up a external type trading bot.
Yeah.
I can speak as to Quest Trust Company. So we are partnered with ErisX for cryptocurrency purchase and sales, and directly sending funds from your IRA to ErisX I am not thinking that they use bots. And then I would agree with Joe and Robert that yes, please consult an attorney on that one. Thank you for your question, though. Let's see. Let's get this one. There we go. All right. So Janice asked, what is the minimal amount to start investing? So at Quest Trust Company, we don't have a minimal account balance. When you open your account with ErisX, I don't believe there is a minimum either to start buying and selling crypto on their platform either. Miss Janice. Let's see. This is from, is there or are there options to gain yield through yield farming?
It's an open-ended question, but yes is the answer. Ultimately, how you get access, I guess you're again, from some of these strategies that are outside the, let's call it the norm, or just access to the crypto exposure through ErisX, you're probably going to need some type of counsel to set up maybe an IRA LLC or something and be able to go that route. There's a few technicalities. There's a few firms that you could go through where they take a portion of that spread and do the work for you. Mm-hmm. And if you want to do it yourself, again, you probably want to speak to counsel how you would set that up and ultimately how your IRA would own each step of the way.
Yeah, directly through the IRA, it would not work that way. So yes, say contact an attorney to see how that would work for you. Let's see, Rob. Of the 30 plus sites, only 3 showed about how to invest. I would like to see how it would be done. See, you use ErisX. So tell me again, who do I go to be walked through for this? Rob, my email, I am putting it in here again. I'm an IRA specialist at Quest. So I can send you the steps to open an ErisX account after you would open a Quest account, or just send you more information about. So if you send me an email requesting some more information about ErisX and kind of how they work, I'm happy to send you that information.
Yeah, and I'll comment there. Just we only have an hour time slot, mm-hmm. And when you have a space of thousands and thousands of projects, it may be similar to the stock market in the sense that if someone said go pick the best stocks and you have thousands to pick from, you got to kind of create your own process. So, if you want to go off the ErisX platform, we kind of showed you some of the due diligence. We showed you the due diligence items that we went through in regards to contacting the teams or being able to underwrite the projects. The first thing you might want to start off with is just what area do you want to focus on investing in? Because there's just a lot of different areas. Like Bill mentioned, there's Metaverse, NFTs. There's a certain protocols that you'll be able to find through the Quest offering, and then kind of follow some of that due diligence process that we outlined and, narrow it in. And like I said, it's always best to just start with a small amount that just puts you in the game and that has you kind of watch your portfolio. And as you do research, you're just going to learn by doing. And so that's the best way to do it, is just start by putting a small amount in. It keeps you tracking what's happening and doing your research on a weekly basis.
And Rob, we may be able to provide a little bit more detail too, so we can put our email addresses in there, because I think you're looking for some other information about how to invest. And I'm not sure your level of expertise, but happy to talk offline privately too. So.
And I put y'all's, I put robertventures.com,
yep.
And the email in the chat box earlier, or the comment box, what have you. All right, Eric. If an investment fund, crypto or NFT was hacked by hackers, what are the ways to recoup those investment funds?
So that is the $1 million question here. So I'll start off by saying some funds, some custody providers do have insurance to a degree. A portion of the holdings are either backed by a number of private insurance companies, which is getting more and more popular. But in general, this is one of the inherent risks of the industry, right? So with emerging technology comes some of the risks. And, we've seen highlights and headlines such as cryptocurrencies, places being hacked, DeFi protocols being hacked as well, NFTs being stolen. This is kind of part of the industry in its current form, unfortunately. But there are insurances for funds. There are insurance for custody providers. It's just not fully coveraged to the degree like many of the banks have with their FDIC coverage. It also splits between cash holdings in some custody providers and the crypto holdings as well. So in general, hacks are a risk in this industry, but over the past 5-7 years that I've been involved in this, we are becoming more and more sophisticated with the technology out there to avoid these kind of unfortunate events that do happen.
And whether it's personally or through a fund, I mean, you probably never want to have a full allocation of your whole portfolio in just one or two positions or one or two different assets. So in case there is some type of breach, a smart contract or something, it's typically only going to be on one project. So if you have 10, you're going to be okay. And through a fund, most of those funds have that diversified portfolio. So if they run that risk, they could cover or recoup that loss. But it is like everything investing, and there is always a risk of a fund or something out there that could, have a big enough loss that they're not able to sustain.
All right, thanks, guys. We're just going to take a few more questions since we are running over time. I did put the email address of our amazing guest speakers today. My email address is in there as well. So I'm sorry we can't get to everybody today, but we do have to watch the time. So we're just going to take the next couple of questions. The next one is: Are there any DeFi wallets through RSX? I am not familiar with what a DeFi wallet is.
As far as I know, they're offering a select certain tokens at the current time and are expanding, as time progresses, but not through DeFi, I believe, at this moment.
Is DeFi like cold storage?
DeFi is just being able to access the different protocols to be able to do these different types of transactions to lend and borrow assets or aggregate yield online.
Got it. Please email me. I'd be happy to ask RSX how that would work. I'd love to give you the.
There's all types of, when you get into these things, there's all type of things that, like we said, again, that some of the regulatory framework is not quite clear or outlined yet. And so, definitely the safest route at this time is, going through a platform like our RSX or so, and not too much DeFi when it comes through the IRA account.
Okay, perfect. Let's go back up. All right, this is the last question we're going to take, guys. I'm so sorry. We just got to watch the time. We do have the the contact information for Joe and Robert are on the screen. I have put my email address in there. Let me put my phone number. I need my glasses, and there they are right now. So I'm happy to help you, with anything that you need. Unfortunately, we just don't have time for all the questions. I'm gonna try and find one that kind of.
I can connect with Rob Stokes after with his Helium router because it seems like he's a little bit more advanced. I'm happy to talk Helium with you. I was actually the first Helium device up and running in Connecticut. So that's an interesting way of putting using an IRA. So happy to talk about that offline too.
Wonderful. All right. Well, that takes care of one. Thanks so much. Let's see. We will go to Jay Katz. 787. I think I'm pronouncing that right. What is a good resource to understand the basic fundamentals of the underlying blockchain technology? I think that's pretty a broad question. For
Yeah,
a lot
it's
of beginners.
broad, right? I mean, I think I mentioned one thing is definitely the white paper, right? And that could be found on most of the project's website. I would definitely always start there as part of my research. Maybe it's more technical for most, but it'll give you an idea of what they're trying to accomplish. With that blockchain. Beyond that, CoinGecko, CoinMarketCap. What else, Bill? What are you thinking from
Yeah, so one of the best ways, to get started quickly is if you identify a project, you identify something that you want to begin research on, do a quick search for either the CEO or the company on YouTube, and either maybe you'll find an interview from us where we're able to dissect some of the tougher questions with the individuals and the company, but there's a lot of information out there in video form that's a lot easier to understand, and you're able to get right to the source of truth, which is the C-suite members of the team, or biz dev representatives for those companies. So there's a wealth of information on YouTube specifically, and if you're looking for specifics on different companies, check out our website as well, our YouTube channel. We've got a number of different high level interviews, and we ask the tough questions there. So we like to, poke the CEOs, and they usually are able to give us the answers that we need to hear, not the answers that we want to hear. So that's part of our deal. So that's where I would start, honestly.
Also, depending, obviously, well, not obvious for everyone, but crypto and blockchain pretty much lives on Twitter, right?
Yeah.
So you might want to, depending on the project and how big those founders are, you may want to try to DM them, their marketing department, or maybe you could always try to ask a series of questions through their DMs.
All right. Well, thank you so much, gentlemen, for being here this afternoon. We really appreciate it. Thank you so much to everybody who joined us online. We really appreciate you being here. Of course, our next education webinar is Saturday, noon Central, same time, same place. I hope to see you there. I will be hosting that class as well. So thanks again. I hope everybody has a wonderful afternoon. Use our resources that we put in there, our contact information. I know all three of us are happy to help. I know this is a new topic for everybody. I know I'm still learning as well. So have a great afternoon, everybody, and see you next time. Thanks so much.